March jobs report kicks off new quarter. What to know this week? Stocks closed out a stellar first quarter last week. This week's jobs report will help determine if the momentum will continue. The S&P 500, GSBC, rose more than 10% in the first 3 months of the year, its best start to a year since 2019. Meanwhile, the Nasdaq Composite, XC, popped over 9%, and the Dow Jones Industrial Average, DJI, gained about 5.5% in the period. Updates on the labor market will highlight the first trading week of the new quarter. Fresh readings on job openings and wage data will preface the biggest headline of the week, the March jobs report, which is due out Friday morning. Updates on activity in the services and manufacturing parts of the economy are also on the economic calendar. On the corporate side, results of a pivotal shareholder vote in Disney's proxy battle with activist investor Nelson Peltz are expected on Wednesday, assuming the two sides don't reach a deal beforehand. Labor market report card. The Fed's preferred inflation gauge, the personal consumption expenditures, PCE, excluding energy and food, increased 0.3% month-over-month in February. At a San Francisco Federal Reserve conference, Fed Chair Jerome Powell called the reading more along the lines of what we want to see, and said that the job market and the economy are strong right now. That means that we don't need to be in a hurry to cut, he said. In the week ahead, focus will shift to whether that characterization of the economy holds up. With the Fed committed to holding rates higher until it sees that confidence, all eyes have turned to the labor market, where continued resilient data has economists hopeful inflation can fall to 2% without the economy slipping into recession. The March jobs report is expected to show 216,000 non-farm payroll jobs were added to the U.S. economy last month, with unemployment falling to 3.8%, according to data from Bloomberg. In February, the U.S. economy added 275,000 jobs while the unemployment rate hit 3.9%. And largely, economists don't expect there to be any signs of cracks in the strong labor market story. For Friday's employment report, we're expecting that the jobs numbers will carry on with the strong momentum of the last few months, Jefferies' economics team, led by Thomas Simons, wrote in a research note on Thursday. The revisions have been extreme lately, and the composition of payrolls has been less encouraging than it was throughout 2023. But we have not seen enough evidence in the peripheral labor market data to make a case that job growth is going to fall off a cliff.